Good evening. Ira Epstein with your SPDR ETF stock market wrap up for this Thursday evening, January 4th, 2024. All right, my friends, where are we on the markets? Well, tomorrow's the jobs report. A week from tomorrow, we get the all-important, we start the earnings season. That's going to be interesting. I was writing tonight about, in my full research report for my subscribers, once they get my written report, the pay-as-you-go, how it increased. It went up about 14% for the year when you go where it was from a year ago. So it's important. It differs from a credit card. You don't get to choose your times. You got to pay it back quicker, but often it's interest-free as well. And that gives you a chance to do like a layaway. Remember those? I don't know how many of you are old enough to remember it, but I remember as a kid, I'd want to buy a gift for somebody, and I'd pick it in January and put a little bit away, go to the store and give it, and generally it was for my mother for Mother's Day or something, and I was maybe, I don't think I was a teenager yet. Probably not. And you'd give a little, and then you'd pick up whatever you wanted to get her at that point because you had your earnings and you were able to do that. Well, this is a different form, a modern variation of it, and it's fascinating. Now, again, we have the jobs report, and this has been a week of all jobs news. We saw the JOLTS number, if you look at it, still 8.8 million. That's a lot of jobs being offered out there. I mean, people want to hire people. Migrants should like that. The name of the game is the government's got to let them get a work permit. That would help. The second thing that we had to look at, today we had a slew of new information. We had the Challenger Gray report, and that showed corporate layoffs are only down 30,000, but they're down, they're not up. So they're not going to cut as many jobs. Then we saw the ADP number, a surprise. It added 30,000 jobs or so. I think the Challenger Gray was not a 30,000 cut. It was less than that, but it was a cut. And tomorrow we get an estimate of 170,000 jobs going to be added to the system. The question is, are we going to be at a 3.6, a 3.8 unemployment rate? I don't know. Then the market's prepping us already that earnings, we're going to hear dour sounds from all the different corporations, starting with the banks next Friday, and then it just keeps going as to where they're going to be. Okay. Today marks one day before the end of my New Year's sale. So if you want to get my SPDR ETF stock market morning videos, where I review 40 charts and I rotate them often, and I ask you what you want to do. By the way, I don't know if you realize it. If you're a subscriber and you write me and you say, Ira, give me your opinion on so-and-so, I try to make the time to do that. And I create for you typically a short video, a 30-second to a minute and a half video. I open the chart. I'm not talking right to you, telling you what I'm seeing, why I'm seeing it, and I send it right on. I think you find that to be better than writing about it and the reasons why. I'll often show the daily and the weekly charts for you. So gives you some ideas. But this is for my yearly research only. You can either do it as a new subscriber, if you're one of our current subscribers that's there on a every month it renews, you can switch up to the yearly. I'll honor that. And there's many other vehicles. You move your cursor up here. There's an icon. It'll take you right to the website. Or you go to iraepstein.com under the word research. When you get there, pick what you want. Be certain to move that slider bar that you'll see to yearly. Fill out everything, put in your card, and when you do so, you will then see the 40% discount show up, and away you go. You'll then receive from us information on how to access it on the website, and we're going to send you an app for either your Android or your Apple phone that will work, and you can look at the videos in there, you can get the quotes, you can see charts galore in there, and it's built for guys my age. You can read it, actually, okay? I'm always leaning over at my friends and their quotes, and they're all wearing glasses because they can't read what they're doing. When we designed what we have, we did it so you can read it. Plus, you can drive in your car, you hit quotes, it orally spits them out. Pretty interesting. Okay, so let's go and take a look together at what the charts look like right now. And what we have is BYD. Now, before I get any further, tell me what you want me to cover this weekend. Got to do it tonight and tomorrow. And I'll choose from what you give me some choices here. Just do it. You can do it right on the YouTube page. You know, there's the comment area. Just do it right in there and give me the ones. I'm not going to do penny stocks, so leave me alone on that. It's got to have some volume so that people can watch it. If you do it, away we go. This market has now completely filled the gap in price. It sold down actually pretty hard today. It got from 54.47 down to 51.10, came back and then finished the day not too bad, down 1.5%. When you look at the swing line, the pattern is clearly bearish. So you had a market that's turned back into a bear pattern. The resistance is right here at 53.17. If the market clears 54.33, you negate this whole move to the downside. And all I'm looking for is the Bollinger Band. You're getting fairly close to it. So I don't know how much downside there's left in the market. Momentum turning down. Who's got control of the market right now? The bears. Really simple. Until you take out that 54.53, this market's bearish. Rivian. Disappointment galore. Yes, they produced more let's call more vehicles, because they give you their total production, and I didn't see how it was broken down between trucks, vans, and blah, blah, blah. But the market didn't like that. Now, here's the problem for Rivian and all the other producers. The people that have money and wanted to own an electric car have gone out and got them. Have you looked at what's available at the dealerships? There's the stockpile's electric cars right now, not the ICE engines and not the hybrids. And the reason is those that had to be the first guy on the block to own the new toy, they did it, they own it, they got it. And the problem for everybody is you can't take a long trip in any of these vehicles yet. They're wonderful to get around in shorter trips. 100 miles, I don't think people have problems. 200, no, you're uncomfortable. Where am I going to charge it? And the last thing I want to worry about is where am I going to fill up my car? I mean, I remember it as a kid driving cross country. I'd always make sure, where's the next gas station? Of course, we didn't have GPS and all that then, and you were always nervous, am I going to make it? And how many miles are we getting to it? I remember it. And today, the computers do it for us. You get in your car where you can make it on what you've got, another 100 miles, blah, blah. It's all there. But if you don't have a charging station that works, I want to repeat the word here, that works, there's a problem. And a large percentage of them that people go to, just read the news, don't work. That isn't good. That's hurting it. Its time will come. People are converting. But I think the smarter way is a hybrid. And then you work into the full electric and give the marketplace time to find reasons. Number one, lower the price of these batteries, makes the cars more inexpensive, get them to compete with an ICE engine. Why should you pay on an average car $13,000 to $20,000 more because it's electric? Makes no sense. You know, you drive it out the doorway, and it's going to lose value, and then you got a new problem. To replace a battery in a car, most people throw the car away. Yeah, read about it. I'm a car freak, so I read this stuff. And that's what's happening, okay? We haven't had that completely happen in these older Teslas yet, but it's coming. When we take a look at the gasoline fund, so now what took place is Israel's not to blame on the latest parts of the problem, and the market to put in a premium for the past 48 hours in all types of fuel, heating oil, gasoline, oil, gave back today that, and you're back into the bear pattern in the market. The momentum's down, the trend is down, the bias is down until you take out yesterday's high in the market of 62, let's call it 70 level. The market's got downside bias. There could be surprises that happen, but I don't see them on a bull side right now. In the financial services, you lost the embedded reading. Uh-oh. That means that unless it gets it back like that tomorrow, before you make new highs on this move, the odds favor you're going back to the red line, wherever that comes in, the 18-day average of closes. In XLI, once you lost the embedded reading, and you can see that you lost it right back here. No big magic about it. Come on, here we goes. Okay. 79.76. If you get back under the 70s here, you're going to that 18-day average, you're under it. So now you've opened the door up for possibly the Bollinger Band if you get another wave to the downside. Market upon market that was going up in November and December are now taking money off the table as investors are rotating. I warned you, the window dressing that goes on at the end of a year, it's called window dressing for a reason. You make your portfolio look one thing at the end of the year and you rotate back because you're not going to see what that is until the end of a quarter now. And that's the game that investors and people play. I don't know why, but it's called window dressing. I didn't make the term up. AMC, still down. You know that I think these movies stink. You've heard me say it. Probably not going to keep covering AMC. I'm ready to cover something else. I don't think they're going anywhere for a long time. I'm very disappointed. And by the way, I'm not a shareholder. I've been negative on AMC since $40. Each time they lie and they have reverse stock splits and they keep offering more and more debt. You're going to buy their bonds. Okay. Lower highs, lower lows. By the way, I want them to survive. There's nothing better than going to a great movie. I don't care how big your screen's at home. It's wonderful on a big screen. I love when I go to an AMC and they got the IMAX. I go all the time. And I love it. I'm a movie theater guy. I love them. But the business model stinks. Lower high, lower low, coming down through here, probably going back into the Bollinger Band. If you rally, look for the 18-day average to be the resistance point. Same in the home builders. And the home builders nothing's changed. The mortgages are down. Today, if you were looking in Toronto, they came out in Canada and they were showing what happened as interest rates have fallen. Their sales are surging, going crazy. Prices didn't go up. More supply on the market, more affordable money. They didn't go up. That's wonderful. Is that where we're headed in America? Probably to a degree. Probably to a degree. You're going to get into the spring and people that have wanted to move, they're going to move. Renters that are tired of renting, they say, I want to own some equity. They're going to get frustrated and do it. You're not going back to 2, 3, 4% mortgages. It's really that simple. The new numbers are going to be 5 to 6, 6.5% probably, and people will adjust and they'll make their moves. And the people that finally say, you know, I want to move and the heck with it, I'll pay the higher mortgage, but I can get more for my house. That thinking is going to permeate. So this is a nice pullback, but long term, I'm much more friendly to the market, but not now. Not now at all. In XLE, the energy, you made a peak. You hit the 100-day average in the upper band. How many of you have taken my course on Bollinger Bands? Raise your hand. Okay. What do I teach when you get up there? You're not embedded. Goodbye. All your money. That's what we teach in it. Gold. Okay, same thing. You got up here, you faltered right at the band. 95% of the time, you will falter at the band, especially if you're not embedded. If you're embedded, it's a different game. You change the strategy, okay, until this turns down. You're then still buying. And instead of using the Bollinger Band, you switch gears to window envelopes with Bollinger Bands. And I show you that in my courses as well. SLV, trend down, bias down. And by the way, my track record for the first 3 days of the year in spiders and ETF, over the top. Futures, thumbs down. It all comes together. It's okay, all right? I will live through it. I've been through this. This is where you trade small, real small, and now you start working your way back into the market. And what do you think's going on here? People are dumping things. You see it. You suddenly change the gears on the market. Copper's in trouble right here. In fact, if it gets under yesterday, not today's low, you open the door for the 35.60s. Copper is what? What's the term that you give it? Not Professor Copper. That is not my teacher Copper. That's Dr. Copper, not Dr. Pepper. Dr. Copper. It tells you how industry is doing. And right now, it's not looking so good temporarily. BND, TLT, come on. Why even going to guess what they're going to do? They've pulled back to the neutral area of the 18-day average, the line in the sand, is they want to see the jobs report. It's a big event. It's going to tell us how the Fed members feel come January 30th and 31st as they have their next FOMC meeting, which then rolls us into February, right afterwards, in another jobs report. I know it's right around the corner and it sounds far away and near all at the same time. It's crazy. Dollar index. Yesterday I said that this is the zone, if you get my morning subscriber video, right here, right now, where the market has to decide is it bullish or bearish. You're at the cusp right now. If you have an update tomorrow, you lose the embedded reading, you're probably going back wherever the 18-day average is. If it's going to fail and go back to the downtrend, it's from right here, and you keep this reading and you start turning down again, and you've done the same darn thing in FXE. So you're at these key points, and you're at a key point. You're at the point that if you want the sale, it's now or it's not going to happen. IraEpstein.com research, move your cursor up here, 40 off. You're going to end up on a Spider ETF morning subscriber video for about $8 a month. Come on, join. I'm Ira Epstein. I'll see you tomorrow morning.